Thank you guys, appreciate it. So we have a very peculiar group of men up here. I want to start off with introductions. So Josh, if you want to just go ahead and give a bit of an introduction about yourself, what you do, and why you're qualified for this.
Yeah, great to meet you all. My name is Josh Gordon. I'm the managing director of Chintai. We're a blockchain as a service platform that focuses on the tokenization of real-world assets. I myself spent the last 12 years in traditional finance before investing in Chintai, actually at the seed round, and ended up becoming investor turned operator, and very excited to be working in this space.
Hi, my name is Marvin, so I'm the founder of Maestro. Maestro is a Bitcoin data platform, so we work with businesses and enterprise and allow them to build businesses and application on top of the Bitcoin blockchain, or kind of this like software middle layer that allows you to interface with Bitcoin at scale.
I'm Chris Maglino. I am with DNA, and I work with both the TradFi part of our business and all of the things that we do on the Web3 crypto side of our business. So I have some experience in this conversation.
And again, my name is Jake Flaherty. I run the advisory services for DNA. I also help manage the deal desk, which we partnered with Chintai on. So I definitely have less experience than these guys, but that's why I'm moderating. We're going to start it off. Josh, if you want to start on this piece, what does it mean for traditional finance and the blockchain to work together?
I think the primary thing that I would think about is like figuring out where the inefficiencies are in traditional finance, and then figuring out how to be able to solve those with blockchain, right? So when you're looking at private markets, like private marketplaces, you're looking at fragmented liquidity, you see like ultimately there's thousands of different verticals that you can work on to be able to solve this, bring it all into one ecosystem, one network, to be able to actually share in liquidity, get more LPs in one place, and be able to solve the ultimate problem, which is just funding, ultimately.
Nice. And Marvin, if you want to add some color into why it's important that banks and blockchain, why they should team up.
Yeah, so I mean, blockchain is a technology, right? It's a tool. And so blockchain is always looking for like a real use case, right? And finance seems to be the most logical use case for blockchain. It's kind of like the hyper-functionalization of this like online digital world. And so it feels like finance is ready for like an upgrade at the rail level, at the technology, right? A lot of these, still this day, like international payments are using payment railways that like predate the internet. It's actually based on like the phone system, right? So we're kind of overdue for overall of the technical stack that finance is based on. And it's really hard to change the system because obviously they're managing trillions of dollars, but blockchain is a good candidate to really kind of bring finance to 2025 and catch up to the tech industry.
Awesome. And so Marvin just detailed kind of why there's a need for TradFi to get this upgrade. Chris, if you want to talk about some of the features or some of the pieces that will come to TradFi, some of the benefits, and why we think that it's going to be so important.
So in the TradFi space, everything's been the same for so long, right? Just think about how long it's been going on, right? The 1900s, early 1900s is when all of this stuff was created for the TradFi world. All the rules that we live against on the TradFi space were written in the 30s, right? In the United States, at least. And so the idea that things take a couple of days to settle in the TradFi world and are just now moving to a spot where they can settle in one day or in 0 days is like a massive accomplishment for that group of people. And all of a sudden you have everything on the blockchain side that can't even fathom the idea that it won't settle instantly and can't settle in a moment. And so you put, there was a slow adoption, I think, from the regular TradFi side to accept that idea because they thought they could control it and they thought that they could command how it was going to work, which they found out that if they tried to control it, it was just like slime moving all over the place, and they couldn't get their hands around it, and it was just moving from the US to Dubai and to another country and to another country, and there's no control of the ecosystem that's out there. So I think that the convergence of these things is inevitable, and that now the TradFi space has no choice but to accept the, integrating what's happening inside of blockchain, and or blockchain will just bypass it quickly. I mean, there will be a day in our not too distant future where the NASDAQ and the New York Stock Exchange and all of these things that were always so relevant to people raising liquidity and capital will become less relevant and not as important.
It's interesting, Chris, what you're talking about is settlement. I come from the lending world, and a lot of people don't understand, or if you've been through a lending process, doesn't matter what it is, these processes take at a minimum weeks, right? And a lot of them sometimes take months. And it's a very terrible process to go through. And the actual settlement is still done in most places, for real estate especially, in person. You actually have to have a physical person at a county recorder's office all the way down to actually process the paperwork. You still need a physical notary to sign off on the individual paperwork. The amount of people that are being paid, the amount of inefficiency in that one vertical, which is just US-based real estate, and it applies to multiple other verticals in finance as well, it needs to be solved by blockchain. It's something that can be so quickly solved by what we're working on. You could already go in, you have to pre-underwrite people's financials, like their whole portfolio, their whole understanding of their credit rating, and be able to give them a loan. It could happen instantly. This isn't something that needs to take 30, 45 days. You don't need to have 15 people working on a team to solve one loan. And that's how this process works right now. It's extremely ridiculous, and I can't wait for blockchain to start to disrupt this.
Awesome. My next question, Marvin, I'd love to hear, what industries do you think could grow the most from TradFi and blockchain working together?
Yeah, we talked about like loans or trading. I mean, just like right now, the world is so globalized. Most of finance is still like bound by nations and then jurisdictions, and it feels very artificial. And that's why you see a lot of new trading happening outside the financial system just to bypass the constraints of these borders. I think we need a financial system that feels more borderless and allows this global economy to seamlessly trade. So I think anything the borderless aspect of finance probably is going to be the first place where it makes the most sense. Our company, we have employees from literally three to four different continents, and we're not even that big of a company. And sometimes we have to pay people through stable coins because it's just not realistic to pay them through regular rails. So stable coins, I think, is probably the biggest real world use case that's being adopted in mass by people that actually don't care about blockchain, right? People use stablecoins just because it's useful, and they may not know anything else about Web3 or blockchain. And I think that's when you've got something that clicked, is when people outside your industry are using a specific feature just because it solves a common problem, and they don't need to know anything about blockchain. They just know that it's better than whatever other system they're using. And I think the more we can find more use cases like that, the more you're able to achieve mass adoption. Because here we're all very passionate about blockchain. We know everything about it, and we're spending our days, looking at the latest trends. But how do we get people that are not interested in blockchain to use it? And that's when you realize, okay, we need to solve problems in the real world that are not just replacing the current workflows, but actually significantly better than the current workflows, so that people have no other choice but realize that this is a better way to do it.
Great answer. Go ahead.
No, I agree with this 100%. I think that when we try to force our vendors to take stablecoins when we can, we have our auditors and people like that, and they've never owned a wallet before, and we try to get them to open a wallet. And the second we can show them that they can get paid instantly on a Saturday, the response is usually like, "Oh my God, that's so cool, that's incredible." And it's that small piece of it. I mean, just look at what Zebu's doing. That's $5 billion is running through that system, and that's just the beginning of it. You know, I think payments, people getting paid, is the perfect on ramp for traditional finance and the use of, you know, just the movement of money, not even the funding of companies or the trading of derivatives or anything like that. Just the pure transfer of people getting paid is the most simple thing.
Nice. We've talked a lot about the benefits of how TradFi and blockchain combining are going to help the world. I want to hear from you on the opposite side. Are there risks to customers as blockchain is adopted by TradFi? Chris, you can go ahead and start.
So I think that in the TradFi world, we've become very accustomed to sending a wire or sending an ACH or paying a bill through bill pay. Whereas in the decentralized space, there's a lot more responsibility that's put on the user to make that happen. And there's a lot more opportunity for fraud at this point, which a lot of companies are trying to solve these issues that exist in the space, right? So just as simple as logging into your platform, scheduling the wire, and it actually shows up somewhere without somebody telling you that they got a test transaction and that it's good to send the rest of the money that you owe them, and making sure that somebody else didn't hack into your system to give a fake address and you have to match every single thing up. Like, I think there's opportunities to solve those problems so that the issues become much less difficult for people to engage with in the future. And so I think that's the risk that regular traditional finance people have when they're transitioning into the space, is like, it's not as simple as it is when you log into your bank and somebody else, like if something goes wrong when you log into your E-Trade account and you send a wire, you call E-Trade. If you make a mistake on sending in the wrong amount of money to the wrong wallet, you just lost your money. And unless you find a really friendly person that's willing to give it back, and if you can even get in touch with them. So I think that risk needs to be solved.
I'd like to add to that as well, where there's also a future where we go too far in the financialization of everything, right? Like, do we really need to make everything a token, right? And that's where you have this idea of the meme coin, where, maybe people are saying, let's tokenize, game items in a video game. Let's tokenize my Starbucks rewards. Let's tokenize my United miles. And then suddenly now your miles are not just like reward points, but now they're speculative assets. Well, now people are trading United miles and speculating on them. Same thing with like Starbucks. And so is it possible that we may create by lowering the barriers so low to create mint assets on chain, are we like over financializing our economy where now everything could be speculated on anything? And so we're seeing these early days with meme coins, and the whole point of meme coins is that they don't have utility, right? If anything, it looks like coins that have utility may be at risk of being regulated as securities, and so there's an incentive to create tokens that don't have utility, just because that may be actually the safest way to not get in trouble by minting. And so it's creating interesting new dynamics and challenges, and that could create risk where it kind of creates this like everything kind of turns into a casino. And so and I don't think that's probably a net positive. So how do we bring the finance into the blockchain, but also not turn everything into a casino?
You make a really good point, honestly. From coming from somebody that is building, we have a platform where we allow people to come on, bring their assets, we underwrite their assets and decide if it's appropriate to deploy. As we scale, that process is going to be more and more tricky. And we've already seen assets come on that they're like, tell us how to structure our product. Tell us, does our financial product make sense? And when you're talking about like the tokenization of everything, there's people that are bringing things to us and I'm like, no, we're not tokenizing that, right? But then sometimes I know somebody else is going to say yes, right? And then how do you differentiate between the people that are saying, no, this asset doesn't make sense, your LTV is off, this is too high risk, right? We have internal compliance controls to make sure that bad assets are not coming on chain, but we know that that's not going to happen everywhere. right? We know that there's going to be plenty of providers that are going to go, of course, pump.fund for tokenization. We'll let you do whatever you want, right? You can create a financial product, boom, click of your thumbs, all of a sudden you now have a product that can be borrowed against. It's going to be out there everywhere for people to see, and they're going to claim that it has some, supposed utility or whatever it is, right? The problem is, I've already seen this come to me. Somebody goes, I have this great deal, my LTV is 20%, I want to tokenize my property, the yield is going to be 15% APY, the IRR is going to be 20%, and then I go and I look at it and I go, this guy's full of shit, right? So the problem is who's going to underwrite these deals, right? So real world, the problem is the banks need to come on. There has to be like very clear regulatory framework for this to work, and that's why we're really excited that the U.S. is starting to lead this. We're one of the few companies globally that's a blockchain business that has securities licenses. Obviously, out of Singapore, so we really underwrite pretty much all of our projects to their criteria. But ultimately, the United States is going to be the next jurisdiction that we're working with. We try to really follow that framework, which can be kind of annoying to people when you're trying to launch Web3 style businesses because they're like, why are you guys being so difficult? And we're like, we're still trying to keep the rules intact here, which is super tricky for us when you're dealing with people that want to just launch tokens. So that's my biggest concern is that, very similar to you, I think that there's going to be too many assets that try to come on chain, and it's going to really degrade the entire ecosystem. And all of the things we're working towards of trying to create legitimacy in this space, we've worked so hard for it, so many years to build something so good, and then you have meme coins come out and people get sniped for $4 billion in 24 hours, right? And it's like, these are supposed to be the legit people. You have the President of the United States launching a meme coin right before he gets elected, right? And it's like super frustrating because you're like, I don't understand why this is going on. We're trying to build a sustainable ecosystem on blockchain that I think actually will really benefit the entire financial system, and instead we're focusing on greed. And I think the biggest fear then, I guess, is greed for me.
Can I?
You go ahead.
I think that tying all these things together too, like there's so many different ecosystems that are getting created for RWAs. There's yours, there's a lot of other people that are building RWA-based platforms that don't communicate with each other. I think that like having, that's the benefit that the whole TradFi business has is everything connects, right? You're on the stock market. You could be on one platform and you can buy stock on the American Stock Exchange, the New York Stock Exchange, the Canadian Stock Exchange, the Chicago Mercantile. You can buy it across the board. So I think that something needs to happen to tie all these things together as well so that everybody is connected to a unified source of tokenization so that everything doesn't get siloed, so that there's a ultimate communication across the board.
I think ultimately, I think once the U.S. establishes its real regulatory framework, I think you're going to start to see a consensus compliance framework that's built out. And then I think what we'll start to figure out is how to connect cross-chain and follow the same compliance. I think that's going to be really, I know a lot of us are working on having discussions with all the blockchain businesses that are focused in RWA. We're like, how do we work together? I've been calling all of them. How do we work together? How do we figure out how to connect our liquidity pools? How do we figure out how to make sure we're following the right rules? Because whoever is the issuer of an actual security is responsible for it, right? So if Chintai issues a security and it goes to Solana, and somebody that's not an accredited investor is holding a security, right? Chintai is responsible. So a lot of people don't understand how this functions. It's really important to understand how actual issuance works, right? But most people don't know. But we need to start to talk about this, work together, and figure out consensus around this.
Awesome. So gentlemen, we have about 2 or 3 minutes here. I want to finish off with one final question. I want you to tell the audience how your company is contributing to blockchain's integration into TradFi. Chris, you can go ahead and start.
Well, we've worked closely with the guys at Chintai to build the DNA deal desk. So we've created a platform that allows us to have people invest into our SPVs that we create around investments that we're making, and then those get tokenized, and ultimately those people can trade their share of the SPV with other people. So you're not stuck in a private transaction forever. And then, obviously we're entrenched in the ecosystem of helping all companies move towards the Web3 ecosystem, and you can think of us like a merchant bank for the ecosystem of Web3 and decentralization. Our goal is to try to drive everything, well, to your point, every time we look at something, we think about how it could be tokenized and how we can create something else out of it. I like the idea of tokenizing my United Airlines points if I could, but every company has a unique idea and we love to see it, and we love building the ecosystem around everything that happens in the pipeline and in the funnel of being a Web3 company.
Thanks. All you, Marvin.
Yeah, so I come from more from the tech side, and so Maestro is really a core infra company, really low level data indexing, and we see ourselves a bit like what AWS or Google Cloud did to the tech industry. Right? In the early days of tech, tech companies had little server racks in their offices and had to manage these computers themselves. And then we moved to cloud-based computing, and now every single tech companies, and even non-tech company, any tech businesses that interface with the internet is using cloud providers. For example, Netflix runs every single movie that you stream through AWS, and so these are kind of like the foundational layer that powers the entire tech economy. And so I think you're gonna have a similar idea with like the blockchain economy, where you'll need these core infrastructure provider that can scale to first millions and then billions of users and power a lot of these businesses under the hood. And we got started first by providing this core scalable infrastructure to DeFi builders. So we got started with like people building DEXs and wallets and lending protocols. And now we're seeing adoption from more like businesses and enterprise, tax software, and then the goal is then to go into institutions, right? So as more of this blockchain economy kind of seeps deeper into the real world, we'll be able to like abstract away the complexity of interfacing with the blockchain and kind of provide this kind of middle layer that can scale to like global scale.
Thanks, Josh.
I think ultimately what I'm trying to work on right now is to bring as many high quality assets on chain as possible, as fast as possible before the banks do it. That's really my number one goal. And I think that if I can be successful at it, which I think I'm going to be, and my team is going to be, I think that we can create DeFi 2.0. And I think that the opportunity to have a real yield, it's not necessarily going to be the highest yield, where you're not going to get 40, 50, 80%, but it's going to be the highest safe yield, right? I'm searching for that right now. I'm searching for companies that are offering that. I'm searching for things that are going to be interesting for people. I'm searching for different verticals that I think people are going to want to invest in. And this is really important for what we're working on. It's like, it's treasuries, tokenized treasuries is really cool. It's a very great use case, initial use case. I'm really happy for all the companies that have been doing that. I think it's really important to show and get to TradFi involved. But I think like taking these real estate debt funds, taking these oil funds, taking all of these opportunities that you usually need a $3, $5, $10 million check to get into that have long durations, typically 5 years, 10 years, 15 years, to be able to get access at, tokenizing them, shortening the duration, letting people trade in and out of them by creating liquid secondary markets, and allowing for attractive yields anywhere from 7 to 20%. I think you're going to see an explosion in on-chain activity. And I think you're also going to see the banks, the hedge funds, all the liquidity providers plow in the second that we actually have an ecosystem that's sustainable there. And so my goal is to build that ecosystem, one step at a time, partnering with every single people. Like Zebu has an RWA company as well. We've been talking to them about trying to collaborate there. There's many people here that are trying to build it because they know that this is going to happen, right? And so ultimately, in TradFi, the banks don't really see each other as competition, right? Every single person is a potential client, and I see it the same way.
Josh, Marvin, Chris, thank you guys for your time today. We're going to have a quick intermission before ScaleX is coming up. That's going to be Robert. Thank you guys again for your time. I appreciate it.
Awesome. Thanks, guys. Appreciate it.
Yeah.
Thank you.
Yeah, nice meeting you.
Thank
A
you.
pleasure.
Nice to meet you, yeah.